Yeah, man. I was gonna say you're on the newer train, man. Tell us more kind of about you and what's going on in your world. And I know you're in Birmingham with us, so what's your story and everything before we as we start to move forward together?
I mean, not much to tell. I mean, um,
Just making shit happen, motivated,
yeah,
right?
just trying to make stuff happen. I mean, I've slacked around too much. I've wasted enough time. Thought I was like, I told myself I need to make something happen. Time's passing by. I mean, I'm still on the your boot camp.
Yeah, good.
I ran across a deal, but they were asking way too much for it, and it needed, to my knowledge, because I've been in the construction world. To my knowledge, it needed at least 100 grand in just remodeling. I mean, walls, ceilings, even outside. It's got that siding. It's on the back side, it seemed to be like wood siding. On the front, it was plastic siding, and the front one, it just needed a lot of repairs. But yeah, I mean, other than that, I'm still looking, still
Good.
trying to find brokers and whatnot.
Yeah. Well, stay in that, of course. The end of the day is you won't get rich like your first deal, of course.
Of
Uh,
course, yes,
you stay busy as you keep the pipeline full, especially if you're out there in the construction site, you're looking at sites. Um, Never be afraid to look at what's adjacent, what's around it. That's another just big key that I've discovered. But the key I would say as you're really getting rolling, Edgar, is if you can focus on really understanding the metrics. I know a lot of people have this idea like, let me just go find the next deal, find the deal. But if they can slow down for a second and really comprehend intrinsic value, like what is the market rent? What is this space currently rented for? What is the square footage? What is the rehab cost? What is our leasing commissions? What are the capital gains? What's the depreciation? You can get this global understanding of real estate. It's going to help you and everybody here. It's going to help you get so much better and fine tuned with your decision making than it would be if you're just like throwing darts at a map. And it's unfair to you, right? Like, you're going to be wasting time looking at sites, and then you go back to your pro forma and you're like, this is a fucking waste of time. Like, why did I just go spend all my time looking at this building when I have all these things that I didn't account for that ends up making this deal absolutely zero productivity? There's no productivity
Mm.
in this. you know so I know it sounds funny, but if you can refrain from having this mindset of like, why am I not a trillionaire after 4 weeks? Which unfortunately a lot of people do. It's not uncommon. A lot of people have this like, why am I not a billionaire? Why have I not bought my first $4 million building in 4 weeks? If they can play the game and truly understand the underwriting component, that's what's going to give you the leg up when it comes to looking at deals, because then you can make more sophisticated offers that give you the leg up, especially when you go and negotiate with the seller to leave money in the deal. Does that make sense?
Yes, yes.
Zane, you got a thought on that?
No, I totally agree. And I mean, that's one deal that you saw. We got to go look at a bunch more, and we got a lot more work to do, Edgar. And obviously, happy to have you. Edgar is a badass on the motorcycle, for everybody who doesn't know.
They're good.
And Nolan, we got to go find a time to meet up with this guy and go have beers or go have lunch with him.
You happy to? Yeah. Dustin, what's going on in your neck of the woods, brother? What's happening with you?
I'm meeting with a potential broker. My buddy works for a company called the McHenry Company, and they actually do a lot of work in Alabama. I don't know if you've heard of them. They're
What
a
states? Just in Birmingham only, or what?
no, they're out of New Orleans, but they do work on the Gulf Coast, so New Orleans, Louisiana, Mississippi, Alabama. Um, I don't know if you've heard of him. It's fine if you haven't, but I'm meeting up with him this weekend when I go back home for Easter. So see if I can. I mean, you know, deals are deals, whether they're in Dallas or not. So if it was something close to you or whatnot, maybe you could put some eyes on it for me, and we'll go from there. But yeah, just trying to build a relationship with that guy. I'm gonna take him out to lunch, and then I'm meeting up with another guy here in Dallas. He's apparently the VP of JLL Finance in Dallas,
Damn.
which I know is a huge company. He works out at the gym that my brother works at, and he told my brother to call him, so I got his number. I'm gonna give him a call here tomorrow.
Oh, let's go.
Cool.
So yeah,
It's not you make, it's the hand you shake.
exactly. Yep. So just trying to just trying to build some connections and see if I could just have a steady streamline of people sending me stuff. So
Yeah. Well, the key on that too is, you meeting with these guys and, most importantly, whether this one relationship works out or not, the big key is it's going to give you confidence to you speak with this one guy, whatever his name is, call him John or whatever. You speak with John, you might fumble over some words, or you might not have your pitch dialed in, but you're never going to dial your pitch in unless you get out there and speak with those guys. You know what I mean? Like it sounds funny, but like I was telling Zane and I were together this afternoon, and I was like, the biggest thing that a lot of people, investors in general, that they don't think about, myself included, was you gotta not necessarily lose, but you gotta go down before you go back up. Like literally, I had all those houses in Indiana, and my property manager was stealing from me because I just didn't have a good, I don't know, just a good, noose around his neck. I wasn't like dialed in on my property manager, and I got stolen from. And so I learned something like manage your money like a hawk, that kind of thing. I've learned something from it. And so regarding your situation, like this guy that comes in that you meet with, who could end up being a massive player and a great capital partner for you. Now, we hope that it works out, of course, and we'd be happy to, like, as you are discovering that relationship, any way I can help you with that dialogue and the questions to ask, of course, we'll do it. But like you getting into that relationship with him, you might not be picture perfect with your pitch at what you're trying to accomplish with him. But imagine on that like sixth guy that you go and say, hey, look, this is what we're doing. This is the buildings that we're buying. Bam, 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 bam. Are you into this? Or are you not? And you got this like oozing confidence. And then the guy's wanting to go buy you lunch because of just like what you're working on, And that doesn't happen overnight, of course, but that's what I've discovered. And that's where people start to like attract to you versus you like just scraping and clawing, just trying to have a coffee with some guy. You know what I mean?
Yeah,
That's
for
my
sure.
opinion, at least, or my experience.
Yeah, it'll get easier over time for sure.
It just takes a little, not that you don't have the courage, of course, but just like it does take a little bit of courage doing something that's like you haven't done in the past, or talking that lingo or vocabulary that just hadn't happened before, I guess,
Yeah. Well, my buddy, he works for that company, and he was actually the one who referred me to this broker. My buddy's just an estimator for him, and all three of us. He was my old college roommate, so
you can definitely shoot the shit with your boy
yeah,
there.
it won't be an uncomfortable environment. I don't think.
Okay, that's good. But that's a good lead in right there. Then when you got kind of that layup or soft toss right there.
Yeah.
Matt Dravis, what's going on with you? Are you still with us today? See if he's on here. Oh, Matt, you with us, dog?
Can't hear you.
Oh. Well, whether he's on or not. Well, if anything else, I wanted to see kind of what I can go over a couple of deals that I'm working on right now, a couple of LOIs that we've submitted. I submitted an LOI this afternoon on a building, but I would like to most importantly look at any sites or some questions that you guys might have. We can run through some pro formas. Zane, if you got some input on something that's on your mind, like whatever. This is kind of just like this little community chat room as we're going, but just happy to go over whatever's on anyone's mind as we're, moving the ball down the field. Does anybody have something that they're working on or not necessarily struggling with, but just that they're trying to piece together?
if no one has
I'll.
anything,
Oh,
sorry.
okay. No, no, go ahead. You go first.
Yeah, well, if no one has anything, I wouldn't mind going over that pro forma of the one you just submitted an LOI on and kind of going through your thought process and your strategy on what happened and you know how you got the numbers where you wanted them and
Yeah, yeah,
whatnot.
yeah. All right, well, let's just do it real quick. So this is Matt said you're not sure why his mic's not working. Um, he's underwriting as much as possible to see what's going on. So Matt, maybe if you can get your mic working, dude, we'll be back with you. So let me give you guys a backstory real quick. So Zane knows this story already. I'm submitting an LOI back on this building in Michigan. Did I tell you that already, Zane?
Yeah, this is a
Okay, all right.
long time coming on this one.
Yeah, so check this out. So let me give you guys a background real quick without getting into the weeds with everything. So this building was brought to me by a broker of mine, and it's up in Michigan. It's up in Warren, Michigan. And if you guys can see this, this is just like some building it's just a regular site. It's, literally just like a building. I think it's like 19,000 square feet, and some change. It looks cute. They got like new blacktop. This is the building right here. And they are in the cannabis business, like the marijuana business. That's what they do. And I got a
Uh,
little spooked by
we might
that because
we might have to go.
well, hey, you never know. Yeah, maybe that's where we hold our CRE summit this year. Is up in Warren, Michigan, at this
Yeah,
building we buy.
Yeah, there you go.
That would
that'd
that's
be pretty
hilarious.
fun.
That's actually not a bad idea right there. All right, great recommendation from Dustin right there. Okay, I love it. So this is just one building, again, there's just a bunch of industry around it. You can see there's just the good news about in like buildings like this, just be like so for y'all to understand, the less residential, obviously, the less loitering and the less crime. Because when people get bored, they start to just like throw rocks and at windows and do stupid shit like that, right? Whatever. So we had this building, literally an LOI signed by both the buyer and the seller last year. And I'll show you what the updated LOI looks like. So here's what it looks like now. It's literally the same terms. So we're offering to buy this building for $7.9 million. We show up at closing with 5.9 million. The seller leaves in the deal 1.975, which is roughly 25%. So I'm going to pay this guy interest of 100 grand over the year, or 8,300 bucks or whatever the number is. But it's an absolute 20-year triple net lease. And the difference, just for everyone's clarification, a triple net lease means that the tenant is responsible for the taxes, the insurance, and the maintenance of the building. But an absolute triple net lease means that the tenant has full responsibility of the property. The landlord has zero responsibility. So like if something happened to the roof, don't call me, call the roofer. Like I don't have any responsibility for that. So that's the difference between triple net and absolute net. And so we put this breach in there that if this guy gets, abducted by aliens in 36 months, that he forfeits his $2 million balloon payment, just to keep him in the deal if he wanted to go run to Cabo. So basically, I'll come up with $76,000 of our earnest money. And of course, there's a guy in our group. His name is Matt Smith. He does earnest money finance. I might call him. We might do it ourselves. I'm actually going to use an insurance policy loan, which if you guys haven't studied that part yet already, we're getting there. But the rent on this building, and I've got it in my inbox. We can just run the pro forma. Let's see here. The rent on the building is substantial. It's like $900,000 a year. So let's just run the math real quickly. So $7.9 million, the rent, again, whatever that number is. So call it's probably 75,000 a month to make it 900,000 a year. Yeah, 75,000. We're going to get a loan to value of, call it 80%. Interest rate's probably at 7, maybe a little bit higher. I'll call it 75%. Yeah, 529, which matches our 5.925. So where I'm getting at is if you look at this piece right here, 5.925, that's our senior loan. That's our first position loan.
That's from the bank.
That's from the bank. That's from the bank. That's what they're going to fund us.
Okay.
So
At 7% interest rate,
at 7%, well, maybe. I mean, I don't know what the interest
roughly.
right now. I just got a loan like 3 weeks ago for 6.9, and I didn't even offer to buy that loan down. So call it 7.5. I mean, who knows, right? I mean, whatever the number would be, it's around that number.
Yeah.
This number is going to be, let's see, 1975. Is that the number? 1975? Yeah, 1975. Okay. That's the second position mortgage at 5%. So amortize, I bet you we probably could get 25 years, but let's shake it at 20 just to see what happens. And the value of the land, I mean, I don't really know. Call it 100 grand. It's probably not like that much, actually. And of course, I changed the address, but let's just look at the numbers. So you got a going in cap rate of 11% and some change. So roughly, you got a 20-year net lease on this thing. So I don't have any of these expenses. I don't even have property management. My expense ratio is literally 0. I got a strong debt service coverage ratio. Okay, before I jump forward, can Dustin or Edgar, can y'all or Matt, I guess, can you explain to me what the debt service coverage ratio is?
I know you want to keep it above 1.25.
Okay,
But,
that's right. That's right. Well, what does the debt service, like what does this 1.57 number represent? Like what does that represent?
I know this. My brain's been so
I'm
mushed
not
with
trying to get you back to college or high school.
Yeah.
I just don't want to like just be up here professing, right? Like I think it's more fun when like we got some dialogue and we can be engaged, if you're not
Yeah.
opposed to that at least.
You're
Zane,
gonna
would you like to interject, or Edgar, you got an idea?
Yeah, sure, I can, but
Let Edgar,
Edgar,
I would, but I mean, I've been cramming a bunch of information that this is slipping my mind a little.
okay.
Nolan, can you hear me?
Yeah, we are supposed to be what you want it to be above 1.4.
We do want to be above 1.4. That's right.
Yes.
That's right. But I'm asking, what does the debt service coverage ratio represent? Like, what does this number mean? Like, what is the utility behind that number?
Matt, we can hear you now. I heard you.
Okay, cool. Yeah, so
Hey, Matt.
I just closed on a residential like 2 weeks ago with the DSCR.
Yes.
So I should know what it means, but I don't know if I can explain it very easily. Essentially what they wanted to know was that can the rent we're going to get from that property cover more than the note, and by what percentage of that? So like if you take 100%, this is 1.57. If you're taking 100%, what you're saying is that one monthly note will cover 1.57% of the 100% of the loan. Is that correct?
The
Yes.
cash flow is 1.57 times the outgoing debt service.
That's right.
Okay.
So imagine the debt service, like just very simply on this building being $100,000 a year. That means the net operating income would be $157,000 a year. So you take, in this case, just so everyone can be aware of this, like you guys said, Dustin, a minute ago, a bank will lend you money at 1.25. So the larger this number is, the safer the deal in the bank size. So you take this number, so it says E66 divided by D29. So let's just go up here. So E66 is our net operating income or our net cash flow, 900,000 divided by D29, which is our annual debt service. So we took our net cash flow of 900,000 and we divided it by our annual debt service. Does that make sense to you guys?
Yeah.
And so as long as you have that, the bigger that, like if this is the debt service, the operating income needs to be above this, of course. And then, of course, when it crashes down, that's what you're left with of cash flow. It needs to be above a spread of 1.25 for a bank to lend you money. Now, of course, this being 157 in this circumstance, this is usually a very attractive lending opportunity, a very attractive. That's why I always say anything above a 1.4 as kind of our financial metrics and ratios, the banks are thrilled to lend you money. You'll have multiple banks actually offering to take you out to lunch and buy you beers at a deal that has a 1.5 debt ratio. Like I'm not exaggerating. Zane is experiencing it with me. It happens
Totally.
a lot. So this is a good debt ratio that's strong, especially with an absolute triple net lease. So I say all that. And why, though? Let me ask you this. I'd be curious to hear you guys' impact and your response. Why the hell did I not close this deal last year? Anybody have an opinion on why I didn't close it? I'm upset about it myself. I would have loved to close last year. I needed some more depreciation, but anybody have an opinion on why the deal didn't close?
Because the weed they're growing isn't that good.
Well, it might not be great, but that's it. But you made the point. You made the point. The
Now,
point is,
you did say you were nervous about it. Maybe that's my guess.
I personally wasn't nervous because it was a non-recourse loan from a local it was a CMBD loan, which is neither here nor there. But uh, the reason is that because it is not federally regulated
Yeah.
and on the whole song and dance, banks in their charter won't allow them to lend money on commerce that is not done, whether it's recreationally or not. It's
Mhm.
illegal based upon the federal regulations. So neither here nor there. Once that gets passed on, this building, I bet, value is about to explode. And that's why I want to take it down before it becomes. And you probably, maybe Dustin, I'm not exaggerating. I don't know. I've done some homework on it when I was really into it, and they have changed some of the prescriptions on what doctors can prescribe on like the marijuana and the cannabis. There's just a lot of there's a lot
Yeah.
more like leniency on the regulation on this than what it was before. And so I think things are trending this direction, but also too when you have government involved that has unregulated income tax, because not to mention too, I could share this with you guys. I don't have it pulled up on my email, but the problem with this one particular deal is that you might know this. Right now, they don't get the same subsidies and deductions that other business owners get. They do not get to deduct their expenses from their gross income. So they pay, so cannabis dealers or cannabis users, or not users, but owners of real estate and also cannabis growers, they don't get to experience the same tax benefits that traditional business owners receive. So if you make a $10 million in a business and you go spend $9 million on payroll and depreciation and cost of goods and commissions, and you left with $1 million, you pay taxes on $1 million. The cannabis deal right now, if you make 10 million, you pay taxes on 10 million regardless of your cost of expenses. So there's a huge discrepancy as to how to actually underwrite the deal from a debt perspective. So that's why there's a lot of bankers that have this like hesitancy, not only because their charter doesn't really necessarily not allow them, but because the risk is a lot higher, even though the cash flow is a lot stronger, if that makes sense from 30,000 feet. Zane, you got an opinion on that?
Yeah, I actually was curious about a risk that I think we talked about on this deal. It could have been a different deal, but I remember there being a problem with these rents being so high over market value
Yep, that's right.
that, and I don't know if you were just talking about that, but so high over market value that it might look like a great cap rate, but it's just simply overpriced, and it's actually an overpriced building. And if the cannabis business were to go out of business, then you'd be screwed with an overpriced property.
Yeah, no, 100%. Great point. So what Zane's talking about is, when we got under contract on this, because I actually was posting about it, shit, a year and a half ago, and I was really excited. I was fired up because I mean the cash flow on this thing. You look at it. I mean, this is the net cash flow. I mean, $228,000 after I service debt to my second position with the lender. That's just under $250,000, and that's dependent upon the interest rate, right? I mean, what if I knock this thing down to 7? You know, $250,000 of cash flow with no money down. So that's attractive. But what Zane's talking about is when I was underwriting this deal initially, which has helped me grow as an investor, is I was specifically looking at just the cash flow. I wasn't looking at maybe the market rent per foot in the area. Although this is cannabis, when a bank is underwriting this deal, they're going to look at the space determined based upon what is around it and the businesses that are in conjunction with federal law. Meaning, the market's rent in this area of Warren, Michigan is like $8 a square foot. This would be trading at $44 a square foot. Look at this thing. Actually, this is even accurate. It's 28 bucks.
And so
It's like 19,000 square feet.
what is the rent of,
47 bucks.
what are the comps like with similar square
Yeah,
footage?
the comps would be in this same similar space of 19,000 feet would be $8 a foot of rent. But they have a different business model, which is not cannabis, and they're also not owner users. They would be just tenants of some landlord. So like the real if this was appraised based upon the market rent, which is maybe not 47 bucks a foot, but maybe $8 a foot. What does that number look like? $8? Yeah, maybe 13 bucks, 13,000. It's like extremely, extremely overvalued.
Yeah.
You see? So that's why we've been having trouble getting debt. And that's why I was like, well, then shit, look, I mean, if I can go find some non-recourse debt and somebody else wants to lend me money, if it's somebody from like another country or something, it sounds silly, but that's probably what we're going to end up having to do. And the rent is, like I said, what we've agreed upon based upon their unique business model. Well, then I'll do it. You know what I mean? I'll do it. But the trading that's around them is literally like glass supply, steel fabrication, distribution, like blue collar business, not actual growing of marijuana. So it's a totally different business model, which is not right or wrong, but it does affect the underwriting, and it affects the banks or the first position lien holder or senior loan or debt, their risk appetite. So comes down to just figuring out what their risk appetite is and then see if we can come together on, the right terms, that kind of thing.
Yeah. And I know since it's absolute triple net, it's not really your responsibility, but is security an issue or a concern for you? You know, because I don't know. I know all the dispensaries, they, like you said, like the banks don't really want their cash, so they kind of just have like liquid cash on them all the time. So I don't know if
the
I don't
bank
know.
or what, say that again.
Like back, I know like when, it was huge back in the day, like middle 2010s, I don't know, 2014, 2015, where like everyone was kind of legalizing it, like dispensaries, and I've even seen them in Oklahoma, like dispensaries aren't allowed to like take their profits and put them in a bank account. Like banks don't want it. Because of the risk of the federal,
Oh
you
wow.
know. So I don't know if they keep all of their sales, in cash. Everything's cash transactions.
That's dangerous. Ooh, that's dangerous.
So
I
I don't
don't
know.
know.
I don't know if
I
they're
don't know.
selling out of this building or if they're just making it, but still, I don't know. I feel like security would be a concern for me too. If
And Nolan, I'm curious, do you know how long these tenants have been in this building?
I don't know the exact date. I mean, the guy that owns this business, they've got like four other distilleries around town. Not distilleries, I guess it would be dispensaries around town. And they're a big, it sounds funny, but like a big dispensary business in Warren. Michigan is like maybe one of like the originators of legalized marijuana. Again, I don't know if that's the accuracy or not. I don't know. But what I did, and this is just one, is I like this is and now this is something that you guys can do when you submit on your first building. This is like not a pivot, but just something that you can think about, like because instead of going to banks or lenders or whatever and asking for money, I sent them a proposal for finance, which instead of asking, I'm offering something. And in my book, that's way more valuable than asking. Like when you ask for something for somebody, their immediately hesitation is to say no, like 100%. But when you offer them something, they have more of an open mind. So I created this one pager just talking about the deal. Like here's kind of the terms, like here's the summary of the deal, here's the description, here's the description of the deal, here's kind of my stuff. I'll spare you all of that. Here's kind of the inside of the facility. Um, it's really clean, like really clean. That's my kind of stuff. It's important. Here's the tenants balance sheet from last year. Had some strong cash flow. But as I was going through this, I was discovering that they didn't have a line item for their taxes, which, like I mentioned a second ago, is a massive liability on their balance sheet and profit and loss because they have to pay it off their global gross income, not based upon their net income, like businesses in the United States do. So, but we'll see. So then I sent them this, pro forma, and this is how I underwrote the deal, just exactly like what we're looking at right now. And
how did
yeah,
what's the story behind the current owner? Why does he want to sell it?
he'd be leasing it back. He'd be leasing it back, so he wouldn't be selling it. He's selling it, of course, but he's wanting to stay in the space basically forever, and they need some liquidity to go find the next site, really.
Hmm.
So leasebacks have a kind of a split response. You got some people that think it's the greatest thing since sliced bread because you got a guy that's going to be in that space forever, or you got people that think, hey, they just want to cash out and go get abducted by aliens or go to the beach.
Yeah.
So, it just depends. But yeah, that's just one deal that we're working on. We got another one over in Moundville, which is Birmingham, Alabama, or south of Tuscaloosa, Alabama, and trying to keep the plate spinning, keep everything moving. So, but yeah, Dan, you got a thought or anything along those lines, like just ways that we can help guys move the ball down the field like that?
Yeah, well, I mean, Ariana texted us earlier before this call, said she couldn't make it today. And usually we have like double this on the live call. I don't know where everybody's at today. Either way, I hope
I
Ariana.
haven't hated this. This is not bad. Like
Okay, this is awesome.
usually there's probably anywhere from 8 to 12 people usually. But sometimes people just like, it's summertime now. It's getting that time where people have baseball practice and things like that. And
Yeah.
I don't blame them. I wouldn't do it. I mean, if anything else, I'd say if there's a timing as maybe we go into the summer months, if there's some times that could be more beneficial to everybody, we'd be happy to accommodate for that. we just want to accommodate for everybody based on their schedule as much as we can. Because the evening times was one way, lunchtime is another time. We just want to serve everybody as best we can, that kind of thing.
Yeah. Well, I hope Ariana would not mind that I shared this, but she's looking at a deal right now. It's also a deal where the tenants, as soon as the deal is closed, apparently the tenants are going to sign like a 10 or 15-year absolute net lease as well.
Wow, nice.
So the only thing is, I told her, look at the financials, make sure that the rental or the amount of rent is under 30% of the total amount of revenue that the business is generating in the first place. And so I think that is the case, but on their financials, it looks like they're taking a loss each year. And I don't know if that's like by design or if that's okay or what the banks would think about that. But I can like pull them up and show them if you want. But
Yeah, I'd like to get. I got like, yeah. Let's look at this.
and I really hope I really hope Ariana doesn't mind.
I'm sure she won't mind. Honestly, this
Yeah.
is probably better this way.
All right, cool. Well,
Here it
yeah,
is.
she can watch this back and get her questions answered too, hopefully.
That's right.
So anyways, these are all the statements over the past few years, but I'll just go into like 2024's income statement, and you can see that let's see. Well, I'll scroll down, spare the details here. But they lost $300,000, in EBITDA last year.
It's not.
So,
It's not showing up.
oh, you can't see this?
Oh,
Oh, sorry. Let me,
maybe go to the second page or something.
sorry.
I'm curious about this.
All right, here we go. Now you can see?
Yeah, we can see it now. Okay. All right. Understood.
Okay, so this is just at the bottom of their P&L here for 2024. Total expenses, $1 million, I guess they made less than that, and they lost $300,000 last year.
Okay.
So I'm wondering if this is like a huge red flag, or I've also heard of businesses purposefully showing a loss,
Yeah. Right.
and writing off a bunch of stuff. So I'm wondering if you might have any type of insight on what the bank might look at this and think.
Scroll up a little bit. Where are the expenses? Like, so they made 2.8 million, or hang on. They made 3.5 million in revenue.
Mhm.
The cost of goods was 2.8. So
And
they were left with $700,000 roughly of profit before they started dealing with their operating expenses. Okay.
mhm.
So they had office personnel, which is probably salaries, interest on debt, which is not uncommon. Those are their two huge expenses.
Yeah, so they had $1 million in expenses, and then so is 300,000 over that 700,000.
Oh, let me know what you want me to do.
Looks like they're paying their office personnel a little high.
Perhaps.
Consulting expense. I need to be their consultant. 84 grand.
Yeah, for real.
That ain't I mean, it's not big money, but it ain't tiny money either for a tiny little whatever business that these guys are in. It's probably a percentage of their gross revenue.
And then
I mean,
you
you
can
can
see,
figure the numbers any which way that you want. If you really want to if you want to get philosophical, like even myself included, like at the end of the year, I go sit with my accountant. I buy him lunch. We go sit down for a couple hours, and we just find a way to get that number to zero. Like,
Mhm.
not uncommon. These guys probably made $1 million in revenue and net operating income, and they just found a way to not make any money. That's the game. Like,
Yeah.
that's the game. So, as a personal level, if you want to borrow money from a local bank and you got to have your credit pulled, then you need to have income to show. But from a business, the move is to not make any money. Like, that's the game.
Yeah. So I mean,
zero income.
I guess you're saying you would maybe predict that it'd be okay in the bank sides if they can go in and look at this stuff and kind of see that they've just been spending money on, business expenses, but I don't
Where
know. I just
is the rent expense that they're currently charging themselves, or is it an owner user?
trying to think if it's like a sale leaseback here, but if I'm not mistaken, it should have
I'm just
been
not seeing
from
it.
an investor.
I'm not seeing a lease expense.
Yeah, it should be in the
Rent, there it is. Rent
yeah.
street, $51,000. So the name is figuring out if that's like an actual market rent cost based upon the square footage that they own or
Hmm.
that they're renting,
Yeah.
you know? And you can run those numbers pretty quickly
Yeah, it's a good idea.
because if the market rent is like 200,000, well, they're going to have to quadruple their rent, and that's going to whack out their expense ratio, which might put them over the hump for
True.
your ability to lend it or to rent from you based on the square footage.
No, that's a great point. Yeah, I'll go pull up her pro forma, but
Yeah, just a
and
thought.
see what yeah, and see what they're planning on paying per year. But another in rent on this new lease, but another kind of concern that she said the broker brought to him, that was kind of interesting is just that like if it's such a long lease, let's say 15 years, then and it has 2.5% rent bumps per year. So the broker was kind of saying that might be um, problematic in the distant future when you're locked in with this tenant that's basically underpaying after the market has gone up more than 2.5% per year. So what do you think about that? I mean, is that like a valid concern or is that kind of just
No,
like
it's a
what the
valid
numbers work?
concern. It's definitely valid. And what Zane's talking about, guys, is saying that let's say that there's two sides of this coin. It's a catch 22, meaning if Ariana or Zane or whoever, Dustin or Edgar or Matt were to dial somebody in for 15 years, in your head, you're like, hell yeah, I've got a lease that's 15 years long. That's a long ass lease, 170 months, whatever it would be, which is awesome. Probably enough to pay off the building. But in exchange for that security, you have to give up the appreciation opportunity of that location. So if the market rent, let's say, is $6 a foot, and you got to dial it in at 3% rental increases for 15 years, and then in 15 years the rent increase has gone to $9 a foot, right? And you're like, oh yeah, this is great. Well, what if the market at that point is $19 a foot? You've given up the ability to earn the market rent on your building. What you can do on the other hand, though, the other side of the rent would be is to do month to month rent, right? Like you can rent some commercial tenant month to month, and every single month that the market goes up or down, you can change their rent, and you can play that rent as it goes up. But you also lose the stability and maybe the bankability of the deal because you don't have a long-term tenant in the space, and they can just leave whenever that they want. Although you might have the upside of finding a new tenant at a higher market rate. The meat in the middle, the sandwich might be put them on a 5-year lease with an option, or a 3-year lease with an option to renew for maybe 24 months, so they can be in there for 5 years, and then there's a rental increase to the market rent. And that way you've got stability and it's bankable, but then also in 5 years from now, you've got the opportunity to renegotiate the existing lease or find a new tenant at the higher market value. So it just depends upon really what your risk appetite or what the investor's appetite is. That's why you see banks like Regions banks or Community First banks that have 25-year net leases on them, and they bump 2.5%, and you just let it ride. That's why trusts own them or teachers unions, because it's just consistent, steady cash flow. But it's also the other reason why you see wannabes or nobodies buying buildings and putting them on month-to-month leases because they want to get that upside, that bump in rent. So it's not right or wrong. I just would recommend doing a 5-year lease. It makes everything bankable. You have plenty of room to negotiate. And if the tenant wants to leave in a couple of years, well, then you got plenty of time to go find a new tenant. I really recommend 5 years because you can really get anybody to finance that deal with a 5-year lease. If you want to include a rental increase, like a bump in there or like a renewal, fine. If you don't, you lose that you lose that like continuity with your tenant, but it does allow you to increase the rents to maybe a new tenant when that lease, turns over. Does that answer your question, Zane?
Yeah, I mean, I think it could heavily depend on, or the route that you go could heavily depend on like the area, the vacancy rate, if it's worth kind of like keeping it shorter because it's such a high demand area, for example, or if it's like in the middle of nowhere, maybe you should keep it long.
Yeah, and who's to say too that, if you have a 15-year lease and that you'd say, oh yeah, well the rents could increase from $10 to $20. Yeah, that's not uncommon. But who's to say that the city or the township doesn't incentivize they give tax abatements to investors to go invest on the other side of town, and then that rent goes from $10 a foot to $5 a foot, which is totally out of your control, but it's just reality. So it just really depends upon, your risk appetite. That's why again, I'm not an expert, guys. I just recommend the 5 years because it makes everything bankable. And most importantly, it makes everything tradable. Like you buy something, you're in it for a couple of years, and you're like, all right, I might know this part of town a little bit better than the next guy. Let me go see if I can trade this thing at a price point and get out of this thing before this grenade implodes, and I can run away with the capital gain and go find a place to park this money in something else and let somebody else sit on that thing. You just never know. But that's I'm dealing with that with with the city with the eminent domain right now. I'm playing hot potato, just trying to sell this building to somebody else at a ridiculous price and let somebody else deal with it. just because I just because I can. Like I've got I already got an offer, but if I can get somebody else to buy it for a higher price, then I'll do it. So just kind of playing hot potato that way, if that makes sense.
Mm-hmm.
So just a thought, but
Mm-hmm.
yeah. Well, anybody else, as we're kind of winding down for the evening, I want to make sure that we answer everyone's questions and thoughts and everything. I thought it was a pretty good call. Again, we usually have a lot more people on this. Of course, maybe it's that time of year where people are on vacation or doing something else. But like I said, I'll be out next week. I'll get with Zane to see kind of what the story will be for for everybody. But excited what the direction that we're all going, man. There's just a lot of moving parts. There's more buildings to buy. So, any final thoughts as we kind of get moving tonight?
Nope.
Yeah, I mean, maybe Nolan, we should put a poll out or something to see what time might work best for people in the future.
Yeah,
Just kind of
yeah,
give like 3 times that work for us.
yeah. That'd be great. That's a great idea. Yeah, and also too, we're going to be probably in the next couple of weeks be putting out our dates, probably like 3 days or 2 to 3 days for our CRE summit, which is going to be uh, our whole thing for an in-person event, like the networking and meeting up with our brokers and bankers and accountants and attorneys, like meeting with everybody. It was for those that were there last year. Nobody's on the call that was there last year, but it is freaking awesome. It's been great. It's been a really great. So we'll come out with like just a couple of dates and everything in the next couple of weeks, and we'll start to solidify that as we kind of go forward. Okay.
Sound good.
Awesome. All right, everyone. Well, holler at us if you can do anything else. Thanks so much for making it, and we will talk to you guys later on. Thanks, guys.
All right,
Thank
thank you.
Yeah, thank you.